Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the Mine podcast. The show brings you the latest insights, thought leadership, and stories from across the global mining industry. Today, I'm joined by Craig Bradshaw, who's Managing Director of EQ Resources, a company that has become one of the most talked about names in the tungsten space. Nearly after 2 decades working overseas, he's now back in Australia and back in the mining industry at a time when critical minerals and geopolitics are firmly in the spotlight. EQ Resources operates across Spain and Australia and is already producing and has seen its market capitalisation grow from under 100 million to over 600 million in a relatively short period. Meanwhile, tungsten prices have surged dramatically and governments globally are paying closer attention to securing supply chains. In this conversation, we're going to talk about Craig's return to Australia, EQ's journey and the challenges and what's driving, I suppose, the tungsten market and the reality behind the next producer stories, and also what the future holds for the company. So, Craig, welcome to the podcast. How are you doing?
Good, Rob. Thanks for having me back. I think last time we spoke was a few years ago when I was still CEO of Masan High Tech Materials in Vietnam.
Yeah, that's it. So, for those that didn't listen to that episode, appreciate if you can go back and listen. So, let's speak about that. Let's speak about, obviously, a little bit about your career, how you got into the industry, obviously your time in Vietnam, and obviously the reasons for you moving back to Australia. So, hand it over to you to tell us a little bit about your career.
Yeah, well, thanks, mate. Look, so I've now been in mining now for 34 years, something like that. And so, I started back in Mount Isa Mines as a graduate. Spent 12 years ultimately with them across the operations there in Mount Isa, copper refineries in Townsville, and then over in exploration and business development based out of Brisbane prior to their acquisition by Xstrata. It's about 6 months work for Xstrata, selling off a variety of exploration assets for them before getting out of mining and joining Toll Logistics in Australia, and working with them really around strategy on businesses that they'd acquired or parts of businesses that they acquired that were non-performing, work on getting the railway up in Queensland, Pacific National, and turnaround of different parts of their business for about 3 years. Then went with them over to Thailand and ran a logistics business for them in Thailand, doing oil and gas logistics and doing a turnaround there for them. And then that morphed into delivering, fridges and TVs for different consumer electronics, which was not my cup of tea. And so I left them and joined Oxiana up in Laos at the copper gold operation up there. And then Oxiana got acquired by, not acquired, we merged with Zinifex to create Oz Minerals. And then the GFC hit and we got sold off to China Minmetals and became MMG. And so I worked with them for about 2 years, 2.5, thereabouts. And then my boss at the time, he left to join Masan Resources in Vietnam. I took his role as general manager of the operations there in Laos. And 6 months later, he gave me a call and asked me whether I'd come and join him and build Nui Phao, the new tungsten operation in Vietnam. And I joined back then on the basis that the most of my career had been involved in fixing things or turning things around where there was problems or issues, and the opportunity to go into a greenfield operation, build it from scratch, build the business culture, the mindset, was just a unique challenge. And so I joined them in February 2011. And to be fair, I went into tungsten thinking, well, it's gravity. How hard can it be? And when we built Nui Phao, it was the first new tungsten mine in the Western world in 15 years. And I don't mind saying it's a lot harder than what I thought it was going to be. And I learned a lot through that process, about myself, about managing teams, focus and working through challenges. We had probably 7 critical flaws in the process flow sheet and in the construction that we had to work our way through. And I put together a very good team. I had a shareholder who had had the financial wherewithal to support us through that process. And so we were in construction 2011, 2012, started commissioning, and probably took us about 2 years to get through commissioning. And when we kicked off, we were running a recovery in tungsten of about 40%. By the time we got through everything we needed to, we were running around 65 to 70% at Newey. And then equally, as part of the mine license, the owners had agreed to build an APT plant without necessarily at the time understanding or knowing what an APT plant was. And so and the government was changing the legislation such that we were on the clock. We had 12 months to start producing a downstream product. Otherwise, the government was banning the export of tungsten concentrate. And so, it was very fast pace, which was good. And we built initially a sodium tungstate plant. We then converted that to an APT plant, incorporating German technology from HC Stark. But 7 years as operations director there was a great journey, and ultimately that led to me becoming the CEO of Masan High Tech Materials for the second 7 years. So I ended up spending 14 years in Vietnam, 7 years as operations director, 7 years as CEO. And at the end of 2024, I felt that I'd achieved everything I could with them, and it was time for change. And so I finished up, and then took about 3-4 months off. The EQ people approached me about coming on initially as a non-executive director, which I did, and then I was in that role for 5 months and agreed that if and when I moved back to Australia, I'd step into the managing director role. Moved back mid-September 2025, took on the role of managing director from 1st of October 2025, and it's been a very fast-paced journey again since. We've got a lot done in the last 4 or 5 months, but from a business perspective, 2 great assets, really good people. Just really needed, I think, the right leadership, management structure, and the business had challenges around liquidity, solvency, governance, and the 5 months as a non-executive director gave me the time to develop the plans needed to deal with those issues. We've got a great CFO on board. Have brought in some additional capability into the business, and having solved liquidity and solvency through November, December, the focus is now on the operation. Production's increasing, and we're moving into a space in the tungsten market that's really good from a mining perspective.
Before we start speaking about EQ, how's your transition been from being in Vietnam for so long, or within Asia, and then moving back to Australia? Obviously, we spoke off air, but how have you found that transition for working so long in Asia, moving back to Australia? And I suppose, what are some of the big differences that you've noticed working within the mining industry from having that transition, moving back?
Yeah, it's an interesting question, and there's different aspects, both from a personal perspective as well as from a professional perspective. So, the straight up, the initially is cost of living in Australia is it is an expensive place to live, compared to living in, say, Thailand, Laos, or Vietnam. Vietnam's, the cost of living, food, sustenance, restaurants, it's very well catered for. And it's very cheap from a food and lifestyle perspective. Australia is much more expensive, and so that's different from that point of view. But probably then from the other aspect, I love Australia in terms of environment. Beautiful blue skies. You go to the beach, crystal clear water. It's super clean. So that aspect of it, is much better in Australia, and certainly appreciate. But from a professional perspective, you know, places like Vietnam, it's very easy to get qualified, capable, hardworking people. And so if I've got a vacancy of always in Vietnam got a plethora of people applying for it. And so if you like, employers have really their pick of people, and there's no shortage of people available to come into your operation. Back in Australia, it's a much more difficult marketplace in terms of getting professionals, tradespeople, electricians, fitters, boilermakers. The market in Australia is much tighter, and therefore it's much more in the workers' favour in terms of who and when and how they want to work. And so that's much more challenging, particularly in a business that ultimately, well, all businesses require people, but in particular, mining and processing. And so certainly over time, we'll look to undertake more automation than what I otherwise would have undertaken in Vietnam. Equally, the cost of labour is much more expensive here than what it is in places like Vietnam. And so from a competitiveness point of view, you know, you certainly have to be, on your game, not only today, but in future, if we're going to maintain our competitiveness as a society and as a country.
Let's talk about obviously EQ Resources. Just wondering if you can give us a snapshot of the company and cover some of the challenges that you faced.
Yeah, look, it's got two good assets. Both assets have been in operation have got strong histories in terms of operation. I think both of them were in operation during World War One, World War Two, and so they're historic mining locations. The asset in Spain, Baracapado, is a scheelite ore body, CaW4. Our asset in Australia, Carbine, is a wolframite deposit, so it's an iron based, and so they've got a lot of similarities in terms of processing, but also a lot of elements that are quite different. The Carbine asset is much more forgiving from a process perspective because the tungsten is hard and heavy than what we see in Spain, but the both of them have got in significant mineralised zones, lots of potential for increases in resource and reserve and mine life. Quite simply, there's been very little work done on either of them aside from developing their main pits. Since probably the 70s and 80s, and so we're now looking at both of them with a new set of eyes in terms of exploration potential, extensions on both of them, but good assets. And probably the key thing that EQ has got that you know was able to be brought to the table in both assets is the IP that EQ has got in sorting technology. So we utilise Tomra sorters in both operations. We've got 3 sorters operating at our operation there in Baracapado. We've currently got 2 in Australia, but we've got a third that we've purchased that we'll install as part of an expansion of the Carbine operation. But that sorting technology and the IP specifically that EQ has developed in regards sorting for tungsten means that we get exceptional results in terms of putting material through that. We reject 90% of the mass split for a 10% yield of ore, and that then significantly upgrades the material we feed to the rest of our processing plant at both operations. And so that then reduces the tons per square metre per hour through your gravity circuits, which means you get more residence time, which means you get more separation and better overall recovery. And so, the combination of that, as well as in Baracapado, we've implemented a variety of different improvements, in particular chasing fine and ultrafine tungsten, and that now, if you go back 18 months, we probably got a zero recovery of fine and ultrafine. Now we get a solid recovery of that. So we're heading to a space where we'll get an overall 65% recovery in scheelite in Spain, and over time we'll optimise that and see that come up a bit further. But that's where you want to be. It's certainly capable of doing that. Our operation in Australia, last quarter, I think we ran it around 75%, but that was on a low-grade stockpile that has got a feed head grade of about 0.08. As we start feeding higher-grade material, we'll get back running around the 80% recoveries. And so, good operations. Up until, last financial year, we produced across the 2 assets 1,680 odd tonnes of tungsten. in contained material. As we go forward, we're probably 3 weeks off feeding higher grade material at the carbine operation into the plant. We're unearthing. We had a big cutback, 1.6 million tons of waste we needed to remove to get into some higher grade material in the carbine pit. We're uncovering 1.6 million tons of 0.264% material. We'll start feeding that into the processing plant third week in February, and so therefore, get much higher production out of our Australian asset, and the carbine asset will continue its current run rate. That should put us in the order of, you know, 3,000 to 4,000 tons contained on an annualized basis, from the June 2026 quarter this year.
Just want to speak about the ore sorting technology. What's the major differences between the technology that you've developed to other technologies, whether that's being used in tungsten or maybe other similar commodities?
Yeah, look, the obviously we buy TOMRA sorters the same as what other people are able to buy. I guess the key thing there is we've developed IP in particular in terms of how we run those TOMRA sorters, such that we can get a 99% recovery of the ore for a 90% rejection rate of waste. And so, we do run those sorters, um, you know, with our own adjustments, and they perform extraordinarily well. And so, from that point of view, we feed 6 mil to 40 mil material to the sorters, get that sort of yield recovery across both operations. And that then means that you're feeding a much higher grade to the gravity plant then in terms of feed. And so your equipment, you've got much more resonance time through your circuit to enable that physical separation to occur through, be it spirals, tables, jigs, etc. To be honest, if it wasn't for the sorters are the differentiator that makes our operations viable. If it wasn't for the sorters, because of the variability you see in terms of um, uh, you know quartz hosted tungsten mineralization, the sorters are what enables both operations to be extremely profitable.
As you mentioned, and you operate both in Spain and Australia, what's the simple thesis behind being a producer in both countries?
Look, originally EQ had carbine, so it was specially metals had it. They did a deal with Chronomet. It was an unincorporated joint venture. EQ then was formed. It then acquired the joint venture interest from Chronomet and moved forward with the carbine asset. On the back of that, Ormond originally had the Spain asset in Baracapado. They got themselves into financial difficulty. Oak Tree then had it, and they ran it around a 45% recovery back then. Couldn't get the breakthrough they needed to make it viable. They took it to the market. EQ was successful in acquiring it. They effectively acquired it for $1 and the assumption of 35 million euro in debt. And that debt's now been reduced down to 15 million euro in debt. Oak Tree, to their credit, took a position in through equity into the combined asset, and have then continued to follow their money and continue to invest through the raises that were done last year, which then gave the business the runway it needed to solve the recovery issues. Last quarter we ran at 58% recovery. We're implementing the plans that we need in terms of different pieces of equipment and commissioning that to get into the 65s through to 68s, and we expect to be running there on a continuous basis. But the business, I guess, evolved through the opportunities that came its way. Through 2025, we did have both solvency and liquidity issues that, with myself coming on board and John O'Court, the CFO, who started 1st of July 2025, we had to work our way through those with the board and investors. We've solved both those issues, and within that context now, the focus is really on making sure the assets deliver. The market's going gangbusters, mate. We could sell everything we produce 4 or 5 times over. The price broke through $1,000 an MTU last week in fast markets. I think we're at $1,080 to $1,325 an MTU. The price in China yesterday went to 1,334. The Chinese are continuing to import tungsten from the rest of the world. They had record imports in 2024. They superseded that in 2025 with record, passing the 2024 number at the end of September. So I haven't seen the full year number, but it's another record in 2025. And so in terms of it, the market is short of tungsten. We're on a trajectory that's going to take us to be the number one producer in the rest of the world by the end of 2026. And that's a really good position to be in, given where we've been.
Yeah, obviously you mentioned the price, and obviously tungsten is a hot commodity at the moment, and as you mentioned, it's up above 1,000 MTU at the moment from around the sort of 330 12 months ago. So what's happening because of this price increase? I take it supply and demand. Where do you see the price going? And how do you see the tungsten market evolving over the next few years?
Look, it's not a demand driven price increase in my view, right? And so, if you look at the history of the tungsten, it depends on what numbers you take. Market somewhere between 100 and 130 and 150,000 tons of demand a year, right? I used 150,000 tons for simplicity, right? But 150,000 tons of demand, it goes into lots of things, right? And so, and 50% of that demand is in China, and 50% of that demand is in the rest of the world, right? And then where it gets interesting, and from a demand perspective, it's continuing to grow at that 2.5%, 3.5% a year in, year out. Now, there may be new applications that result in increases in that, but at the end of the day, my base premise is it continues to grow at that 2.5%, 3.5%. Where it gets interesting is on the supply side. Through the 60s, 70s, and 80s, as China moved itself up the production curve, it brought a lot of tungsten units into the market, less than what the rest of the world could produce at, and that took everyone in the rest of the world pretty much out of the market. And so, as a result of that, China companies dominate the market. They produce about or supply 83 to 85% of the world's supply, with then Russia, North Korea, Myanmar, and Kazakhstan, who've got the mine in Bogoti, which is Chinese owned. So 100% of that production also gets exported out of Kazakhstan into China. But that takes you to around, let's call it 88, 89% of supply comes from those locations. And so, you've got a significant structural deficit in beating the demand for the rest of the world. And so into that, with the current geopolitical situation, China banned the export of dual-use tungsten in February 2025. And quite simply, the way tungsten is produced or normally traded is as ammonia paratungstate. You buy a container of ammonia paratungstate, 20 tons, it will then go into a plethora of different materials, but it won't go on a 20-ton to 20-ton basis, and therefore the ability to get export permits just about dried up. It doesn't sell that way, and it doesn't get processed that way. And so on the back of that, the rest of the world is short, right? And in the meantime, you've got across the world countries committing to spending more of their annual budgets on defence applications to meet 4 and 5% of GDP spend. You've got obviously geopolitical unrest in Russia, Ukraine. You've got uncertainty around what China's going to do with Taiwan. You've got uncertainty created as a result of US and Venezuela, right? And, at the end of the day, that may well be a very good outcome, but fundamentally it creates a lot of uncertainty. And so in the face of that, increased spending on defence, pretty much all defence applications require a certain volume and amount of tungsten. And so when the world supply is drying up, you've got increased spending in defence, and you've also got a variety of other applications, be that, every MRI machine's got tungsten in it. You've got tungsten that's required for WF6 to do the etching on chips. The smaller chips get, you use a tungsten wire to do the cutting of the wafers to convert into the individual chips, right? And so the cost of tungsten in a lot of those applications is not relevant to the final cost of the finished product, but the product doesn't work without tungsten. So you've got many applications that are price inelastic. There are some. So my understanding, for example, for CNC machines, you could use high-speed steel or some ceramics for certain applications, not all, but for some applications, at probably $1,000 an MTU in tungsten, right? But there's a whole host of other applications where it's just simply not interchangeable. And so where does the price get to? I don't know, right? I know that China's certainly buying up all available tungsten. They're paying more for it, for importing into China, than what the rest of the world has been paying. So the rest of the world's playing catch up. I don't know where it is. I do know that talking to some end use customers in North America, they're talking about the fact that they've got a 4-month backlog in terms of their supply of tungsten metal powders or tungsten carbides from various suppliers. Talking to other customers that in 15 years of tungsten, I've never had companies that are well in the downstream ringing me up wanting to know whether they can buy tungsten concentrate so that they can provide it to their supplier, who can then turn it into the tungsten, the spherical cast tungsten carbide that they need for their plasma coatings, for example, right? And so, you've got a plethora of industries that just can't get the material they need. I'm not sure where that puts them ultimately, but I do think it means that the world is short. Prices are going to continue to run. And they'll probably run until new supply can come in. And if you look at the history of mining, a new mine today probably takes you 10 to 15 years from a discovery to production. Even if governments look to fast track things, you might bring that into 5 to 10, but that's not 12 months. It's not next month. So, I think as a producer into the market today, that historically produced 1,680, that we get our assets delivering on the potential. We'll produce in the order of 3 to 4,000 a year over the next 3 to 4 years. That augurs well from an EQR perspective. I think Almonte, they've got their phase one coming online. Their phase one, I think, from memory, is around 2,000 tonnes. I fully expect that'll come online at some point. I wish them every success, because ultimately they're not my competitor. Guardians are not my competitor. It's a case of our competitor is China, and making sure that the world's got enough material to be able to be self-sufficient, and we're well short of that.
There's obviously a lot of companies out there looking for government support for their projects. What position is EQ in around government support?
Yeah, look, the problem with government support is the there's a lot of distance between the rhetoric and seeing actual outcomes, right? And so, and a lot of uncertainty associated with that. And so we've had various applications in front of government for approval from both from a US perspective as well as an Australian perspective. But there's a lot of uncertainty that you've got to work through, and competition with other projects. In both cases, our applications, we got a letter of interest from US Exim back in June 2025. US government shut down. They've come back to work. There was then the announcement of the cooperation between the US and Australia. There was then additional letters of interest issued. And so there's a backlog of projects and applications across different commodities that are being worked through. And ultimately, there's a limited number of people who can work on those. I'm not the type of person who's going to sit back and wait for governments to solve our opportunities. we've continued to advance discussions with commercial outcomes. We've got a number of customers who are looking for increased production. We've got the ability to double the production at our carbine asset. The team previously acquired the long lead equipment, uh, didn't have the financial resources to install it. It'll cost us around 16 million Aussie to do that and take us around, 6 to 9 months for that installation to occur. We're at advanced stages of negotiations with a couple of off-takers for them to fund that, us to install that, and potentially have that being commissioned and operational by November 2026. And so, in that context, working directly with customers in the market gives us greater certainty than relying on government outcomes. If the government outcome and a grant comes through, fantastic, but it's not something we want to sit back and wait for. I'd rather have control of our destiny and drive that towards outcomes with long-term business partners.
If you look at the company's market cap, it was around $100 million back in September 2025. But now, fast forward January 2026, it's over 600 mil, so a six-bagger. Wondered if you can comment on the share price and obviously the market cap.
So look, I think if I go through 2025, the company certainly had solvency issues, it had liquidity issues, and so core to creating the outcome organisationally to enable a re-rate of the stock, we had to solve those issues that the market was negatively marking down the stock price, recognising the amount of risk that the company had. And so we went to the market to do an equity raise in December, went to the market to raise 24. We ultimately had significant oversubscriptions and we took 34. And that enabled us to de-risk the balance sheet, pay out 7 million in overdue creditors, pay out about 4.2 million in convertible notes that were due, and then also put money in the bank such that we were in a situation to deal with any risk that came through as part of significant movement of waste material and overburden strip back that we were undertaking at Carbine. The other issue was the fact that we had two large pieces of debt that were due, 15 million euro due on the 12th of December 2025, and another 5 million euro due on around the 9th of January. And so in terms of that, discussions were being held, but there was no solutions in place for that debt. And so, starting on the 1st of October, that was my focus with our CFO was to de-risk the balance sheet from an EQ perspective, get a package in place to replace that debt that had a better maturity to it. And so we were successful in negotiating an outcome. We had 4 groups that were interested in providing a solution. Ultimately, the solution that we went forward with was with Traxys. That we'd announced that to the market. That gives us 15 million euro with very good commercial terms. And then as part of that, there's a marketing arrangement that's being entered into with Traxys for a specified volume over 5 years that works really well for us. And so, solving that liquidity issue, solving the solvency issue, then meant that people could look at the business with fresh eyes and really focus on the potential of the assets as opposed to the risk. And so that's what you've seen probably from around mid-December. We did that raise at 5 cents in December. And since then, we really haven't looked back as a company, as the focus is now really on us delivering on our assets. Barracapato in Spain had record production in October. We had our second best production quarter to close out the December quarter. Our asset, between the two assets, Barracapato generated 14 million in free cash for the quarter. Our asset in Australia, because of the strip back, consumed about 12.6, so we were cash positive for the quarter to the tune of 1.4 million. Not a significant number in and of itself, but what it demonstrates is the trajectory we're on, and that was at lower prices than we are at the moment. And so, as both assets get up the curve in terms of what their potential production or what the assets are capable of producing into a market that the price continues to run. Customers have solid demand for our production. Investors start to look forward. And we did the numbers at a $700 an MTU, and we're seeing 150 million Aussie EBITDA from the two assets based on where we expect them to be producing on an annualized run rate from March 2026. The price has now gone over 1,000, and so obviously that number just continues to improve. And so we're in a good space, and I think the re-rate is really around people now having seen the business de-risked, getting on board with the potential. And so it's really positive for us.
Great. And lastly, what's the outlook for EQ over the short to medium term? And if there's anything else that you'd like to add?
Yeah, look, from a business perspective, yeah, the things that normally would keep you awake at night, the market, the price, those things are going gangbusters, right? And so it's really for us focusing on the things that we can control, right? And the business historically has always been short of capital, right, or starved of capital. And so now it's a matter of, with the funds available and both assets getting into a good production space, generating solid cash streams, it's a matter of reinvesting in the business to get us up, change the mindset of our teams from survival to focusing on, preventative maintenance, proactive maintenance, focus on asset availability, asset utilization, getting our throughput consistent, standardization of processes and systems. And so, that's going to be a core element of our journey through 2026, so that our business becomes just I'm going to use the word boring, but tungsten's not a boring space at the moment. But it becomes very predictable, right, in terms of what we're going to do day in, day out, month in, month out. Equally on the back of that, the teams are working on drill out programs, both from a Barracapato perspective and a carbine perspective. We've got the expansion of the carbine operations that we're looking to. We recommenced work on that in the third week of December, of seeing the options study meeting last week, just as we nailed down aspects of the exact layout of the expansion and the equipment that then delivers ongoing benefits from an operability and flexibility perspective. And so they're the core things that we'll be looking to implement. We've also got the Wolfram campground. It's about 60 kilometres to the south of our operation there at Carbine. We've got 5 high priority targets that we've identified. We've also got the old waste dumps that we've done initial test work. They're amenable to the ore sorting, and so we've got further work in that space to do. And that, I think, gives us solid basis to continue to grow the company from an organic perspective. But then there's also, opportunistically, there'll be assets that we think are of interest, that the current or incumbent owners haven't got the experience, the capability, or the history in developing or operating tungsten assets that might give us a unique opportunity to do something smart as we go forward.
Craig, thank you very much for your time, sharing your story and obviously telling us about EQ Resources and obviously talking about the tungsten market. And as you mentioned, it's a hot commodity at the moment, and hopefully it will continue being a hot commodity. If our audience wants to reach out to you, if they've got any questions and obviously follow EQ's story, how can they go about doing that, and what social media platform channels are you on?
Yeah, look, we do have a communications manager in Rosalind McNeil. She does a fantastic job. She looks after all of the communication channels, from I think Instagram to Twitter to LinkedIn. So if people want to reach out, they can reach me on C Bradshaw at eqresources.com.au, and or through Rosalind McNeil, or through our website, through investor relations. Happy to field questions or help investors or the market understand what we're doing, where we're going, and what our plans are.
Yep, we'll include those all in the show notes accompanying this episode anyway for easy access. So, Craig, thank you again. And hopefully you can come on the podcast later on in the year, because I imagine the tungsten market would be in a different position as it is now. And it'd be good to get an update from yourself and around the tungsten market. So more than welcome to come back on the podcast later on in the year.
Thanks, Rob. Look, thanks for your time, and thanks to your listeners for tuning in. Much appreciated. And everyone stay safe. Thank you.
Yeah, great. And all the best. Thank you for listening. Hope you enjoyed the episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Obviously, we're talking about tungsten, which is a hot topic at the moment. And I suppose gold and silver are taking the commodity space up at the moment. So I appreciate if you can share this episode far and wide across the world to people that you know in the industry, people maybe outside of the industry that is really interested in commodities, because it is needed throughout the whole value chain of everything that we do, everything that we do in the world. So appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.